There's an economy happening right now that's worth trillions of dollars. No one collects taxes on it, no one reports it to the government, and depending on where you live, it might be bigger than the official economy you see every day. It's not illegal exactly, it's not all criminal, but it's invisible. A plumber fixes your sink and asks for cash. A restaurant pays its dishwasher under the table. A freelancer doesn't report half their income. A landlord rents out a basement apartment that doesn't technically exist. These aren't isolated incidents. They're threads in a massive parallel financial system that economists estimate represents anywhere from 10% to 60% of global GDP, depending on the country. That's roughly $15 trillion floating through an economic layer that governments pretend doesn't exist, but absolutely depends on. This is the shadow economy, and the uncomfortable truth is that it might be the only thing keeping the official economy from collapsing. Let's start with something simple. You hire someone to paint your house. They quote you $5,000. Then they ask a question. Do you want a receipt? What they're really asking is, do you want to pay sales tax? Do you want me to report this income? Do you want this transaction to exist in the official economy? If you say no, they'll knock off a few $100s. No paperwork, no trail, cash only. Congratulations, you just participated in the shadow economy. Now multiply that by millions of transactions happening every single day across every city, every industry, every income level. That's the scale we're talking about. But here's what makes this fascinating. The shadow economy isn't just some underground black market filled with criminals. It's your neighbor, it's small businesses, it's immigrants sending money home. It's people trying to survive in an official economy that's become too expensive, too bureaucratic, or too broken to function. Think of it like this. The official economy is the main highway, regulated, monitored, taxed at every toll booth. The shadow economy is the network of side roads, shortcuts, and dirt paths that people use when the highway becomes too congested or too costly. And right now, those side roads are getting very crowded. Here's how the shadow economy actually works and why it's nearly impossible to stop. There are three main layers, and they exist simultaneously in every country on Earth. Layer 1 is the informal economy. This is mostly legal activity that simply doesn't get reported. The babysitter who gets paid in cash, the handyman who doesn't give receipts, the Uber driver who forgets to report some of their earnings. No one's trying to run a criminal enterprise. They're just avoiding taxes and regulations that feel burdensome or unnecessary. Layer 2 is the unreported economy. This is where businesses and workers operate completely off the books. Restaurants with ghost employees, construction crews paid daily in cash, street vendors with no business license. It's technically illegal, but enforcement is inconsistent, and the economic pressure to participate is enormous. Layer 3 is the illegal economy. Drugs, smuggling, counterfeit goods, human trafficking. This is actual crime, and it's surprisingly integrated with layers 1 and 2. A restaurant might pay some employees legally and others under the table, while also accepting cash from a supplier who's moving stolen goods. The boundaries blur quickly. But here's what economists discovered that changed how we think about all of this. The shadow economy doesn't operate separately from the official economy. It subsidizes it. Let me explain. When a construction company pays workers under the table, those workers spend that money at legitimate businesses, the grocery store, the gas station, the phone company. That unreported income becomes reported revenue for someone else. The shadow economy pumps money into the official economy while avoiding the friction of taxes and regulation. It's like a lubricant that keeps the gears turning. And governments know this. They know, and they mostly look the other way because cracking down too hard would expose how fragile the official system actually is. Now let's talk about the numbers, because this is where it gets truly staggering. The International Labor Organization estimates that roughly 2 billion people worldwide work in the informal economy. That's 61% of the global workforce. Not in Somalia, not in failed states, everywhere. In Greece, the shadow economy is estimated at roughly 25% of GDP. In Italy, it's around 21%. Even in Germany, one of the world's most regulated economies, it's estimated at 10%. In developing countries, the numbers explode. Nigeria, 65% of GDP. Bolivia, 62%. Zimbabwe, 60%. But here's the part that should make you uncomfortable. These aren't just statistics. These percentages represent real economic activity that governments can't tax, can't regulate, and increasingly can't control. Let's do some quick math. Global GDP is roughly $100 trillion. If the shadow economy averages even 20% globally, that's $20 trillion of economic activity happening outside official channels. For context, that's larger than the entire economy of China. $20 trillion that doesn't show up in tax revenue, doesn't contribute to Social Security, doesn't fund infrastructure, just circulates through cash transactions, informal agreements, and parallel systems. And it's growing. After the 2008 financial crisis, the shadow economy in most developed countries expanded significantly. When official unemployment rises, people don't just sit at home. They find work, just not official work. During COVID-19, the same thing happened. Lockdowns destroyed millions of formal jobs, but the shadow economy absorbed much of that labor. People started selling things online without reporting it, offering services locally for cash, operating completely off the grid. The official unemployment numbers looked bad. The real situation was worse, but also better, depending on how you looked at it. Here's where the story gets strange, because the shadow economy creates a paradox that governments can't solve. On one hand, it represents massive lost tax revenue. If governments could capture even half of that shadow economy, taxation could fund healthcare, education, infrastructure, all the things they claim they can't afford. But if they actually succeeded in eliminating the shadow economy, millions of people would lose their livelihoods overnight. Prices would spike as businesses passed on the cost of compliance. Official unemployment would skyrocket. The shadow economy is simultaneously the problem and the pressure valve preventing explosion. Think about immigration. In most developed countries, undocumented workers form a significant portion of the shadow economy. They work in agriculture, construction, hospitality, usually for cash, always off the books. Politicians campaign on stopping illegal immigration, but if they actually succeeded, food prices would surge, construction costs would double, and entire industries would face labor shortages. The official position is enforcement. The actual policy is selective blindness. Or consider small businesses. The official tax code in most countries is so complex that full compliance is nearly impossible without expensive accountants. A tiny restaurant can't afford that, so they cut corners, a little cash here, a few unreported tips there. If governments cracked down hard, thousands of small businesses would close, jobs would vanish, neighborhoods would lose services. So they don't crack down. They make examples occasionally, collect fines, and maintain the fiction that everyone is playing by the same rules. But everyone knows the truth. And now the shadow economy is going digital, which is where things get really interesting. For decades, the shadow economy ran on cash, physical money that couldn't be tracked. But cash is disappearing. Countries are pushing digital payments, eliminating large bills, making it harder to transact off the books. Sweden is almost entirely cashless. China processes billions of digital payments daily. Even developing countries are leapfrogging to mobile money systems. Governments thought this would kill the shadow economy. Finally, they'd have visibility into every transaction, no more hiding. Except the opposite happened. Cryptocurrency emerged. Peer-to-peer payment apps proliferated.
Digital platforms created new ways to transact without banks or government oversight. The shadow economy didn't shrink, it evolved. Someone in Venezuela can now receive payment for freelance work in Bitcoin, convert it to dollars through a peer-to-peer exchange, and spend it locally without ever touching the banking system. The entire transaction is invisible to their government. A gig worker in California can accept payment through Venmo, not report it, and face essentially zero enforcement risk because tax authorities can't monitor millions of small digital transactions. The tools that were supposed to bring transparency actually created new shadows. And here's the really strange part. Governments are now dependent on digital platforms to function, but those same platforms enable shadow economy activity at a scale that was never possible with physical cash. It's like they built a highway to track everyone, and people are using it to speed away.
Let's zoom out and talk about what this actually means for the future of economics. The shadow economy exists because the official economy has become too expensive to participate in fully. Taxes, regulations, licensing requirements, compliance costs, these aren't just minor inconveniences. For millions of people and businesses, they're the difference between survival and bankruptcy. When a government requires a small food vendor to have 8 different permits, pass 12 inspections, and pay fees that equal months of revenue, that vendor has 2 choices: operate in the shadow economy or don't operate at all. Most choose the shadows. This creates a feedback loop. The more people operate in the shadows, the less tax revenue governments collect. The less revenue they collect, the higher they raise taxes on those who remain in the official economy. The higher the taxes, the more people are pushed into the shadows. It's a doom spiral, and no one knows how to stop it. Some economists argue for simplification, lower taxes, fewer regulations, make the official economy easier to join. But governments need revenue, and powerful interest groups benefit from complexity. Others argue for enforcement, crack down harder, make examples, force compliance. But that requires resources governments don't have and risks economic collapse if it actually works. The truth is, there may not be a solution. The shadow economy might just be a permanent feature of modern economics, growing larger as official systems become more burdensome. And here's the final irony that ties everything together. The countries with the smallest shadow economies aren't the ones with the best enforcement. They're the ones with the most trust in government. Denmark has one of the smallest shadow economies in the world, around 8% of GDP. Not because they have aggressive tax police, but because people generally believe they get value for their taxes. Healthcare works, education works, infrastructure works. The social contract feels fair, so people honor it. Greece has one of the largest shadow economies in the developed world, not because Greeks are inherently dishonest, but because trust in government collapsed. Corruption, inefficiency, and broken promises convinced people that paying taxes was just feeding a broken system. The shadow economy became an act of economic self-defense, which means the size of the shadow economy isn't really a measure of criminality, it's a measure of institutional failure. When official systems work, people use them. When they don't, people build alternatives. The shadow economy is the alternative. So here's what we're left with. $15 trillion, 2 billion workers, a parallel economic system that exists everywhere but appears on no official charts. Governments can't eliminate it without causing collapse. They can't tax it with massive enforcement infrastructure they can't afford. And they can't even accurately measure it because, by definition, it's designed to be invisible. Meanwhile, it's growing, adapting, going digital, becoming more sophisticated. The official economy is the one we talk about: GDP growth, unemployment rates, stock markets, central bank policy. But underneath it, invisible to statistics and headlines, is this other economy: larger in some countries than the official one, providing livelihoods for billions. And no one has any idea what happens when the shadow becomes bigger than the light. Maybe it already has. Maybe we're all just pretending that the economy we can measure is the economy that matters, while the real action happens in the margins, the gaps, the spaces between official transactions. The shadow economy isn't a problem to be solved. It's a mirror showing us that our official systems have failed to serve the people they were designed for. And until that changes, the shadows will only grow longer.